the US government was able to essentially force buyers of US treasuries around the world by giving military aid to different countries, but telling them that in return, you will have to put your reserves into US treasuries. So it's not hard, and I don't think you don't even have to be a conspiracy theorist to imagine that this could be a solution that they start using. And so if this happens, then this is when the flight to other real assets will be even more attractive, whether it's real estate, whether it's precious metals, whether it's Bitcoin. And I think one of the latest papers by the St. Louis Fed is they talk about how you have these alternative banks such as fintechs that are trying to provide alternative investment solutions, alternative investments, alternative saving accounts. And these could end up being more popular rather than the traditional banking system, because with the traditional banking system, those banks will be forced to put their deposits, their reserves into non-interest bearing accounts, which will hurt depositors. And so a lot of these depositors may flee these traditional banks and go into fintechs. And this is where I think there will be a lot more regulation, and it will be harder for fintechs to grow their businesses, just because obviously the government and the Fed and the banking system wouldn't want to see capital leaving their hands into these sort of neobanks. So there could be that as well. And I think also that they will probably make investing in Bitcoin harder as well. As people understand more of this, they will see Bitcoin as an attractive alternative solution, simply because it's a lot easier to hold than precious metals. And so I would assume that they will probably make it harder. When, I'm not sure. But if they do that, then it kind of gives a Bitcoin the stamp of approval of what it basically stands for. As the secret Muslim banker, I've basically decided to essentially shift my career from conventional finance to more Islamic finance. I've been in the financial industry for nearly 10 years now, and right now I'm managing an investment fund, which I've been with this particular fund for nearly 7 years now, and the principal investment strategy is alternative financing. So basically investing in small companies listed around the world and coming up with alternative methods of financing them. So not necessarily investing in equity and not necessarily lending them money as you would with a traditional debt. But that being said, even though these are not traditional debt instruments, some elements of what we do would be indirectly linked to riba. And this is not something I gave much thought about when I started my career, to be honest. As a young person who wanted to join the financial industry, and one of the main motives was to make money, of course, as most young people tend to think about their future careers. It's thinking about what is the best ROI that I can get. And so being principally money motivated, I didn't care too much about what I was doing and how I was making my money. But Alhamdulillah, that's changed now. I've realized that obviously this is an extremely important point to take into account. One has to be in line. If one wants to be at peace, then what they do, what they say, and how they think should all be in line. And that's how you find real peace. And so I'm working on that now. And the idea is obviously to shift from the conventional to the Islamic finance industry. And that was the motive behind creating this online persona, to be able to not only share my understanding of the financial markets, but specifically target Muslims who want a better understanding of the current macroeconomy. I've come across many financial newsletters, and I still consume a lot today, whether it's newsletters, whether it's people on Twitter, whether it's podcasts. But there is always, it's always from a secular point of view. And as Muslims, we obviously have to understand certain elements and important elements such as riba, and being able to differentiate between ribawi investments and others that are not. However, unfortunately, due to our monetary system, everything is linked to riba one way or another. And even though it may not be linked directly, for example, stocks, it's important to understand how interest rates play out, what their trajectory is, understanding the dynamic between interest rates and stocks. And I think even though you may not be dealing with interest rates directly, it's very important to understand how halal investments could be affected. So that was the idea behind creating this, to write more about this, to learn more about Islamic finance. I should also specify that I'm not an expert in Islamic finance. It is just something that I want to learn more about. And given my knowledge of finance, I don't think Islamic finance is too difficult. And so I'm learning as I go along. And that's the idea. Now, inshallah, of course, I would like to translate what I've learned so far in the conventional financial industry to help come up with innovative financing solutions and help develop the Islamic finance world. Because what I've seen and what I've learned so far is that a lot of what we see and deem as Islamic finance is not completely Islamic, especially when it comes to the Islamic banking sector. But I guess we'll probably go into details regarding that. So I'll probably leave it there, and I'd be happy to answer more questions about me and what I've done so far.
Sure. And the reason why you've chosen to stay anonymous at this point in your content creation life?
Yeah, sure. So, I mean, the reason why is because I'm still managing the fund. So it's not something that I can, unfortunately, it's not a role that I can leave immediately. So being a senior member of the fund, a principal in the fund, it's something that I have to basically ease my way out of. So it helps me be as truthful as I can be with my, let's say, anonymous persona online without it affecting my current role. And so the idea is to ease myself out of this, inshallah, as soon as possible. And then who knows? I mean, I may continue being anonymous. I may review myself. I feel as though the anonymity also helps to stay true, and it helps when you can say things as they are without having to worry of the backlash. When there is no specific personality linked to a certain profile, you can be as truthful as you want to be. And I think that helps as well.
Yeah, that makes a lot of sense. And plus, it's a good way to market yourself, the secret Muslim banker. There's a lot of intrigue around that name. And then you could capitalize on that intrigue if you decide to do a reveal later. Countdown to revealing the identity.
Exactly.
I got a head start over other people, but
that's true.
I may or may not have figured it out, but still.
But yeah, no, exactly. I think even the name, it came very randomly to me, being the secret Muslim banker. And it was just realizing, after having read a few books on Islamic finance and following a few personalities, I realized that online there wasn't much financial knowledge specifically targeted to Muslims. It was either very focused on Islamic finance and Islamic banking, or there wouldn't be much of analyzing the financial markets from an Islamic perspective. Of course, you're doing that as well. I think your angle, of course, is more about investing and helping people invest. And so my angle is more about understanding the financial dynamics. And I think that's very important for people to understand, because whatever central banks do and however the economies fare, that will affect the next 10, 20 years of how they handle their investments. So I'm not really focused on picking specific investments. I'm focused more on the macroeconomic trajectory in terms of sectors in general, in terms of what to do with your money, how to think about investing and saving. And I think to be able to do that independently for anyone listening, then it's important to understand what's happening in the broader economy.
That makes sense. So let's talk about that. Let's talk about what you think is happening in the broader economy. Obviously, we are at a stage basically in the economic cycle where there's a lot of ambiguity regarding monetary policy moving forward. The Federal Reserve in the United States is trying to get a hold on inflation, and to some extent it has been successful, but to what extent will we see perhaps a repeat of the 1980s, wherein we thought we were in the clear, and then inflation rose back up, and then the Fed had to backtrack and retighten things, and how this affects basically the Halal-conscious investors' portfolio in terms of, obviously, there's volatility that's associated with these interest rate changes that are meant to keep tabs on inflation. So what is your take on where we are right now, and if you have any projections for the next 6 to 12 months?
Yeah, well, I guess it's always very difficult to determine where the market is going to be in 6 to 12 months. I think anyone that is adamant as knowing where markets are going to be is probably fooling themselves. I mean, but that being said, everyone obviously is very much aware that the central banks, specifically the Federal Reserve, but others as well, such as the Bank of England, have been quite aggressive in increasing interest rates. And the reason why is because inflation was very high and it wasn't moving down, because initially what was the claim is, as we came out of COVID, the economy picked up and consumers were very eager to spend. However, because a lot of businesses around the world shut down, trade shut down, it became quite hard to rekindle and reignite the economy as it was before. So, of course, there was a big demand-supply mismatch. And so the supply couldn't keep up. And so what a lot of people were saying is that the initial inflation that we saw was mostly a supply-side issue. And that's why prices went up, because costs went up. Now, what we're seeing is that inflation is a bit more entrenched. It's been going on for longer than initially planned. And the Federal Reserve is obviously watching this very closely, and they're very adamant to make the market understand that they're serious on fighting inflation. Now, it's important, obviously, you mentioned the 70s and the 80s, and that was something I mentioned in my last article as well, whereas in the late 60s, early 70s, you had an initial inflation spike. They brought interest rates up, inflation went down, and they brought interest rates down again, and the inflation spiked again. And so the same thing happened. They brought interest rates up, inflation came back down again. However, inflation kept coming back. And so that's when the new chairman, Paul Volcker, who increased interest rates to 20% to make sure that he could fight inflation for good. So they're obviously looking at that period and don't want to repeat that same mistake of bringing down interest rates too early. And so whilst the numbers are pointing to inflation coming down, in terms of the economy in general, it's still not as bad. The unemployment is still low. Now, when we're looking at the manufacturing indices and so on and so forth, they're not as bad, but they are there. It does look like the interest rates are affecting this data. However, it's important to note that whenever interest rates are increased, it can take many months before we see the full effects. And so what I feel as though is you have, for example, Goldman Sachs coming out saying that there is a low probability of recession. I just think that the lag between the interest rate hike and the effect on the economy is very large. And so we haven't seen the end of it. And so what will happen then? Of course, if there is a recession, then the only thing to do is to bring interest rates down again. Now, will that cause inflation to spike? Potentially, I think it will. I think we're in a situation where the money supply has grown so quickly, especially due to COVID, that all of this excess monetary growth feeds into inflation. On top of that, I think one of the big problems, and this is something that not many people are discussing, although Lynn Alden, the macroeconomic analyst who released a paper in June about this specific problem, explained it very well. And so I recommend anyone who's interested to read that to better understand what's going on. And basically, she refers to a problem known as fiscal dominance, in the sense that if you want to tackle inflation, you first have to understand what is the cause of inflation. So typically, we know that inflation comes from a growth in the money supply, and there are two levers for that. The first lever is increase in bank lending. So if interest rates are low enough, people are more willing to borrow, and therefore more money is being created, and that excess money supply feeds into the economy, and that's one way of causing inflation. However, the second element is the government spending. So whenever the government borrows money, that is also a form of money creation. And so if you're in a situation where the government debt is extremely high, as it is in the US, I think it's around 120% of GDP. If you have such high excessive debt and the interest rate is high because of the central bank policy, then that could actually be more inflationary, because what you have now is you have very high interest rates, which means that more money needs to be essentially printed or borrowed to pay for this interest. And that kind of feeds into it, that kind of feed into some kind of loop where high interest causes high interest rate expense, which means more money creation, which means more inflation, and so on and so forth. So Lynn Alden refers to a period of the 1940s, which that was another period in which there was a very high public deficit relative to GDP, and that was obviously because of World War II, and so governments borrowed excessively. And inflation actually came down because there was no need to spend as much money. So when the government stopped spending money on the war, money creation went down substantially, and therefore inflation came down. Now, the way, I mean, the way we're seeing it right now in the world, I don't see how the US could be spending a lot less from a government standpoint. I don't see them spending less on defense. They have Medicare and all the other social safety nets. If they do bring them down, that would be hugely unpopular. So it's hard to see how they could bring this deficit down. And so even if we are in a situation where there is a recession and interest rates come down again to stimulate the economy, I think because of the high public deficit, then we're constantly going to be in this inflationary environment. And so that's where I think the trajectory is, that although maybe in the next 6 to 12 months it's not going to be as bad, inflation may come down. I generally think that because the rate hike was so aggressive, I don't think that we're out of the woods, and I wouldn't say that there is a small chance of recession. I'd put the chance of recession at more than 30%. So if that does happen, then we could assume that interest rates are brought down again and the cycle would stop. So I think that's an important element that a lot of people are missing. And so the fiscal dominance issue is a big one in my opinion. And of course, if you have a view of inflation being entrenched, then it's important to position yourself accordingly by holding real assets, businesses that have cash flows, that have, let's say, sticky cash flows that can increase with inflation. So technology is obviously one. Commodities, real assets as well, such as real estate or even precious metals such as gold, and of course Bitcoin. So these are the assets I'm kind of favoring, and my view is obviously 5, 10, 20 years down the line, and I think that's how investors should be positioning themselves. But I think I've spoken quite long, so I'll leave it there for now and happy to answer any more questions to dig into what I said.
Yeah, sure. I did want to kind of highlight the sort of systemic fault in what we have currently, which is the unchecked printing of money. That is a product of our money essentially being debt that is issued by central banks. And we go through phases wherein creation of money slows down and other phases where it speeds up a bit. But at a fundamental level, it's basically the same problem, which is what you described, which is that money is created through debt, and that debt has an interest rate attached to it, which requires the creation of more money in order to pay it. And on we go. And it seems like this system is basically not sustainable. Do you have any thoughts on that?
100% it's not sustainable. I think it's just a matter of when does it stop. I think if you look back in history, and you don't even need to go that far out, if you look at the 1800s and 1900s in America, you had central banks that scaled back, were destroyed and replaced. And whenever those central banks were let's say replaced, what you had was that basically people resorted to using real assets, whether it was real estate or gold. Now, is that going to happen? Is it going to be as easy? I don't know. Can you predict when? I don't know. But it's one of those things that if you know something is unsustainable, then it would be pretty stupid to ignore it. I think most people are ignoring it, but it's just because most people don't understand how money works. And so, as you said, all of the money that we have right now is the money that is created is based on debt. It's credit fueled. So it's in a way never ending, because the more you print, the more there is, the more debt there is, and therefore the more that you need to pay back with interest. And so you have to keep going through that. Now, one way that they could essentially slow down the effects is by conducting some form of financial repression. Because if I go back to what I was saying earlier, is if interest rates are high and the government has a very high public deficit, then the high interest expense could actually be more inflationary. So one way to tackle this is if the central bank's ability to fight inflation is actually dominated by the government's ability to fund its debt, which is the whole idea of fiscal dominance, then what it will potentially do is inflation can become a second factor to fight, because it's more important that the government can fund its debt. And so But they're not stupid either. They're not just going to bring interest rates down to help the government. They'll be a bit more specific, where they could force people to essentially buy treasuries, buy US bonds. When I say people, I mean financial institutions, whether it's in the US or outside of the US, even if the interest rate is below inflation. Of course, if you're buying a bond, what you want to be doing is that you want to be making sure that the interest rate you receive is going to be positive in inflation adjusted terms. So you want to make sure that the interest rate you receive is going to cover at least inflation. However, if you know inflation is going to be much higher than the interest rate on a bond, then you might forego the bond and not wish to hold it. This is where the US government could essentially force institutions to hold treasuries, to basically hold US government debt, whether that's in the US, whether it's outside of the US. For example, think of central banks around the world. They might force them to increase their reserve holdings in USD and US treasuries. There could be some sort of military pressure to do that as well. It's not hard to believe, because this is also how the US government was able to essentially force buyers of US treasuries around the world by giving military aid to different countries, but telling them that in return you will have to put your reserves into US treasuries. So it's not hard, and I don't think you don't even have to be a conspiracy theorist to imagine that this could be a solution that they start using. And so if this happens, then this is when the flight to other real assets will be even more attractive, whether it's real estate, whether it's precious metals, whether it's Bitcoin. And I think one of the latest papers by the St. Louis Fed is they talk about how you have these alternative banks such as fintechs that are trying to provide alternative investment solutions, alternative investments, alternative saving accounts. And these could end up being more popular rather than the traditional banking system, because with the traditional banking system, those banks will be forced to put their deposits, their reserves into non-interest bearing accounts, which will hurt depositors. And so a lot of these depositors may flee the traditional banks and go into fintechs. And this is where I think there will be a lot more regulation, and it will be harder for fintechs to grow their businesses, just because obviously the government and the Fed and the banking system wouldn't want to see capital leaving their hands into these sort of neobanks. So there could be that as well. And I think also that they will probably make investing in Bitcoin harder as well. As people understand more of this, they will see Bitcoin as an attractive alternative solution, simply because it's a lot easier to hold than precious metals. And so I would assume that they will probably make it harder. When, I'm not sure. But if they do that, then it kind of gives the Bitcoin the stamp of approval of what it basically stands for.
Yeah, it would certainly increase the attractiveness of Bitcoin and basically prove its utility. But why I find, now it's not beyond the American government to do this, but it will be extremely tough for the United States to do that, considering how connected the world is. And if they are imposing some restrictions on buying Bitcoin, and some other country or some other jurisdiction does not have the same restrictions, then you're probably going to see a flight to capital to those more Bitcoin-friendly jurisdictions. Unless when they actually implement these types of restrictions, they also implement a way to control capital flight out of the country, which is not easy to pull off. But I mean, just describing it paints a pretty bleak picture about possible scenarios and how the system actually ends.
And I think it's just something that people should be aware of. Now, in terms of imposing capital controls, getting money in and out of USD, that will be very hard to do because USD is used globally. It's obviously the world reserve currency. So they wouldn't be able to impose capital controls, like, for example, in countries like Turkey or China or South Korea, where they limit the exchangeability of the dollar.
Perhaps the central bank digital dollar has something to do with that, or any sort of, if I wanted to put more
100%.
conspiracy theory hat on, the central bank digital dollar may make that more possible for them. There's a lot of uneasiness regarding the central bank cryptocurrencies, if they're even considered cryptocurrencies. But do you have any thoughts about central bank issued crypto?
Well, I mean, if the governments and central banks have managed to ruin money, then I'm sure that they have their ways, and I'm sure they have found their advantages to using a CBDC. Obviously, the main selling point for the public is going to be that you could get paid directly. So it's sort of like helicopter money, right? So kind of like the stimulus checks that were given during COVID. With the central bank digital currency, you could give it straight to the citizens. However, you could also program it for it to be spent only in certain ways, in certain industries, on certain goods. And the way I see it is just more control. I believe that if the central bank has their digital currency, they can dictate how that money is spent. Of course, they may limit how much meat you buy because of how supposedly polluting it is, because of all the methane that the cows produce, and so on and so forth. So yeah, I don't think there is a very positive thing that will come out of CBDC. I think it has more to do with control and gives them more flexibility to do that.
So you're obviously a fan of Bitcoin from what you've mentioned. Give us your sort of bull thesis for Bitcoin and why you find it has utility, and what I think, keeping in mind that this is not personalized investment advice, but what place do you think it has in the average investor's portfolio?
So I think it's just the easiest method to save your wealth. In the end, we have money, which is, let's say, paper money or money that we have in our bank account, and we keep it in such a form to be able to exchange it for other goods and services. It's the most exchangeable good that we have, which is, let's say, in this example, would be the US dollar. And the problem is that we all know that more money is being printed, more dollars are being issued, and therefore the value of that particular dollar keeps going down. To give you an example, in 1990, $2.34 buys you as much as $1 did in 1990, so $2.34 today. So that shows you the amount of inflation there has been over this period. And so the value of your cash is constantly going down. Now, this is also why people invest, whether it's in fixed income, whether it's in stocks, whether it's in precious metals, gold or silver, for example. Now, the problem is that when you're investing in these securities or commodities, you always have to trust the counterparty to be able to handle that. So, for example, gold, unless you store your gold at home, it's definitely not the most convenient asset or security to hold. So Bitcoin makes it a lot easier to store your wealth, to be able to manage it yourself, just because obviously it's purely digital. Of course, it does come with risks in terms of making sure that you can secure your keys. And so obviously with the Bitcoin software and its inherent technology, with the fact that it has a limited supply and it is scarce, which is exactly what you want, then it makes sense that it could be a very good tool to save your wealth in and to protect yourself from inflation. So I think the accessibility, the fact that you can transfer it from one country to another in less than 10 minutes. Then the only downside is that how exchangeable is it in other goods? Now, we have more and more companies, retail shops accepting Bitcoin. Of course, it's not as many as we'd like, but I'd expect that to increase over time. And you have technologies such as Lightning, which is decreasing the amount of time that Bitcoins get transferred and making the process a lot cheaper. And when you see the amount of developers and the community building behind this product, you can see that it has a lot of legs to stand on. So it's a bit of an asymmetric trade. The way I see Bitcoin is that if it doesn't work, then it goes to zero. If it does work, it's going to be worth a lot more than it's worth today. And I'm inclined to think that it will work just because of how a monetary system is being handled.
Yeah, that makes sense. And how do you answer sort of the critics of Bitcoin that suggest, oh, well, this is something that, specifically from an Islamic point of view, keeping in mind that you're not specialized in the field, but they would suggest that, oh, well, this is not backed by any authority, it's not backed by any tangible goods, therefore it should not be trusted, and some have went as far as to say that it was haram. Do you have any thoughts on that?
I mean, it's just not a very convincing argument. So typically the argument for Bitcoin being haram is that it's either extremely volatile, doesn't have intrinsic value, or that it's being used by criminals. I think for the last one, being used by criminals is a fairly stupid argument to make, because the most used currency by criminals is the US dollar. So that's not a good reason. Then you have, in terms of it being volatile, well, anything new, anything nascent is going to be volatile. Think of, a new company listed on the stock market, a small cap will be volatile, but it could still be a good investment. I mean, you may argue then that, well, at least there's intrinsic value because they have assets and so on and so forth. Yes, well, I think that the intrinsic value comes in the form of its technology and the fact that the programmability of Bitcoin makes it so that no one can tamper with the code. No one can issue Bitcoin more than is programmed. And that's the value it has. And in terms of it being backed by nothing, I mean, it's a bit similar to gold. Gold is just a precious metal, and we give it value based on what we think it's valued. It doesn't have any intrinsic value per se. There's a very small percentage of the gold being mined and refined that is being used in electronic products. It's a very small percentage. I think it's something like 10%, if I'm not mistaken. So the majority of gold being mined and refined is just kept as a form of savings. Think of it as an alternative to money. So on that basis, I don't see it being much more different to Bitcoin. Of course, if we look at the old Islamic empires, they would use gold and silver and give their stamp of approval and create the gold dinars based on whoever's running the state at that particular time. And that is one way of doing it. Could you do something with Bitcoin? Well, would you need to? Because the whole point is that when you have something physical, you kind of need to certify how do you differentiate between this gold coin and another gold coin. And so having the certification or a stamp, you can guarantee that this particular gold dinar is actually worth this amount of gold. And that was a way of certifying it. However, do you need to do that if you have a technology that does it for you by itself? And my argument is no, you don't, because we know exactly how it works, and we know exactly through the code how much one Bitcoin is. And so no one can really tamper with that. So I don't really agree with those arguments that it could be haram. Of course, I'm not a scholar to speak on that, but you have multiple scholars that have come out saying it's halal as well for these very reasons. And typically the ones that do say it's halal is because they have really understood the monetary system. And I think to understand Bitcoin, you first need to understand money. And when you understand today's money, it's hard to ignore the advantages of Bitcoin.
Yeah, absolutely. And there does seem to be a correlation between the commentators' knowledge about Bitcoin and just economics in general, and between their level of acceptance of Bitcoin. And I would add basically to your arguments the fact that the fiat currency that we're using currently is not backed by anything. So
well, it's actually backed by credit. That's what it is.
Yeah,
it's backed by treasury, which is the worst thing. And the whole reason we have fiat money is because of interest rates. People forget that as well. The interest rates have created the incentive for banks to create new money. And this goes back obviously to the goldsmith bankers in the 1600s, where they kept the gold in their reserves and they would issue notes to anyone that wants to keep their gold stored, and they could use those notes to transact. When those bankers realized that most people were using notes and weren't really taking their gold out, they decided to issue new notes and lend them out because of interest. If there was no interest, why would you take that risk? So the whole fiat system is based on that particular predicament. And it's ruining a lot of people's lives, and they don't see it because inflation is a tax that you pay. And constantly. And of course, the ones
who are poor more than the rich, because the poor,
of course,
as a percentage, keep more of their purchasing power in cash, whereas the rich have assets that actually appreciate with inflation, if not outpace inflation. So, I mean, from an Islamic point of view, this is certainly something that needs to be dealt with and needs to be solved.
100%. And you have also the fact that typically non-Muslims would find a way to protect themselves somewhat from inflation by investing in bonds or investing in interest-bearing accounts. Typically, those interest rates should cover inflation. But if you can't, then unfortunately, you're at a loss. And so your only alternatives are investing in the stock market. And unfortunately, there hasn't been that much innovation to invest in fixed income Islamic securities. Obviously, there are a few sukuks, but some of them are probably questionable in terms of how they're being structured. So you're left having to invest in the stock market, which is fairly risky, potentially gold. But I think now Bitcoin is a very strong alternative that more Muslims should consider studying.
I agree. And I'm going to push on this question. I'm not sure if you purposely avoided it or not, but how do you see the average Muslim investor should approach Bitcoin or think about Bitcoin as it relates to their own personal portfolios? So is this something that you think belongs in the average investor's portfolio, or what are some of the criteria that an investor should have if they want to invest in Bitcoin?
I personally believe it belongs in everyone's portfolio. Then it just depends on what your risk tolerance to determine how much as a percentage of your portfolio should be put into Bitcoin. If you're, let's say, fairly conservative, then maybe 5% is good enough, maybe max 10%. If you truly understand the monetary system and you see where this is going and you have a long investment horizon, so let's say you're saving for maybe the next 10, 20 years, then it makes sense to bring that percentage up. I would say something like 20, 25%. Because again, but to determine what percentage is correct, it really comes down to, firstly, how old you are, how long is your investment horizon, and how much of the monetary system you understand. Because the more you read into the financial system, the more interesting Bitcoin becomes. And it becomes somewhat of an inevitability that its price will continue to rise. So from a risk reward perspective, assuming all of the risks that we've discussed, then the reward seems extremely high. So I think it becomes a very interesting investment. So
yeah,
I think between those percentages, those I think are healthy. But again, it depends on you as an investor. When do you need your cash? If you need it in the next 6 months, then probably not. Don't invest in Bitcoin. But again, you shouldn't be investing for with a 6-month horizon anyway. You should be looking at multiple years. So that's how I would frame it.
Nice. Yeah, I think that's really valuable. I would also add that it also depends on what type of hands you have, whether you have diamond hands or lettuce hands. If you think that you're going to panic at the next 20% drop and sell, then perhaps this is not the asset for you. Some people just don't have the temperament for volatile assets, and they should probably stay away from it.
Exactly. I think the most important thing when it comes to investment is really understanding yourself first. That's what you have to figure out, what kind of person you are, and then adjust and construct your portfolio that way. Because if you just copy what someone else does without understanding the risk tolerance, without understanding how old they are and what they're looking to achieve, then you're in for a rough time. So that's the main thing. People should focus more on understanding who they are and what they like, and then constructing a portfolio on that basis.
Great. And shifting gears here, I wanted to get your thoughts on the Islamic finance industry as you see it. Do you have any critiques about it? What are your thoughts on it and where it seems to be headed? Is it on the right trajectory as you see it, or is it not?
Well, I mean, it seems that unfortunately, it seems that we're on the wrong trajectory because there hasn't been much innovation. We've been hearing about Islamic banks for some time, but when you read into, for example, books by Haris Irfan, such as Heaven's Bankers, or listen to his last podcasts, you understand that there hasn't been much going on, and whoever's running this industry is probably not as Islamic as they should be, putting religion at the forefront, rather than seeing it as a method to extract wealth from the Muslim community globally. So the challenge is that being an Islamic bank is extremely hard, because if you're a bank, then you're tied to the monetary system. And so you have to abide by certain rules. And those rules are obviously riba-based. And so they mask riba using other shenanigans that they don't call riba, but are essentially end up being the same thing. So my approach and the way I want to tackle things is look at it from a bottoms up approach rather than a top down approach. Rather than waiting for the big institutions and big Islamic banks to come up with solutions for the average entrepreneur, the average Muslim investor, there needs to be a bottom up approach where you have individuals creating companies and creating solutions that are tied to the real economy. So a perfect example is Haris Irfan with Cordoba Capital Markets, in which he created that profit participation note, which is not something completely new. We've had profit participation notes before, even in the traditional industry. But when you structure it that way, you have something that is Islamic and makes sense and is attractive for both the business and the investors. And so that's what I would like to see, just more innovation. The issue is with Islamic banking is that I feel as though many people who've joined the Islamic banking industry and the Islamic finance industry, and I could be wrong, but they focused their studies on Islamic finance and they focused their perspective on Islamic finance. However, I think it's very important to understand the financial system in general and understanding financial markets. unfortunately, there is no better teacher to teach you financial markets than joining the financial markets. And of course, this means the conventional financial industry, whether it's investment banks, hedge funds, and so on and so forth. Maybe that's a bit of a contentious issue. Is it permissible for a youngster to join Goldman Sachs or JP Morgan to learn the trade, to be able to then do something good with it? I genuinely think it's okay, because I could be wrong and maybe someone can correct me. But if you go there with the mentality that you're learning the trade to then apply it to the Islamic finance industry, then surely that will be a good thing. Because what we don't want is people that don't really understand the financial industry, they don't understand structuring, going straight into Islamic finance and just copy what was already done. And we don't need more of that. We need a lot less of that. So I actually discussed this with a sheikh. I don't want to bring up his name, but he said for him, this is fine if that is your intention. Maybe others will disagree, but I think for the next generation, those that want to do something in Islamic finance, I would say get a job in the traditional financial industry. Learn from the best. Just, make sure to stick to your ways. And it's obviously very hard, because as the money comes in, as you're surrounded by people that only care about money, you obviously need to have a very strong character. And typically, even maybe a lot of Muslims who are in the investment banking industry, they tend not to be very religious as well. So you have to make sure not to lose yourself. And this is why it may not be something for everyone. But I genuinely think that's an important aspect to consider, to learn as much as you can from the traditional financial industry, to then be able to have the tools necessary to affect real change.
I couldn't have agreed more, to be honest. I think that إنما الأعمال بالنيات, of course. If you're going into the industry in order to learn and take that learning in order to improve what's offered to Muslims in a Sharia compliant way, then I think that's actually a noble cause to have. Because it's true what you said, it's very hard to innovate effectively in finance without having practical knowledge in finance. So you have to actually do it. You can't just in theory innovate. You have to actually do it and understand the subtleties of actually doing it in order to come out with practically good ideas. And that's why I named my blog to start Practical Islamic Finance, because everything I was reading about Islamic finance was not practical. It was very much in the clouds, and if it sounds good, then that's Islamic finance, and generalities without talking specifics about how things actually work. And clearly, I mean, it was written by people who did not have experience in finance. I think, was just going to wrap things up and ask you if you had any final words.
Well, I guess obviously I want to thank you for the opportunity, for bringing me on. I think I would just say to anyone listening, anyone who's in the financial industry, anyone who's looking to enter the financial industry, I think do your best to learn, and don't think that you're incapable of coming up with something innovative yourself. And so always have that mindset, understand that Islamic finance is powerful. There is no other sin in the Quran where, God says that if you conduct that sin, then be prepared to fight a war with me. So riba is something that we can't take lightly. And so that means we need to help the community to find solutions for them to grow and be entrepreneurial without using riba. You have many SMEs, small businesses around the world, that the founders and entrepreneurs are Muslim, and they can't grow because they don't want to take on debt, and maybe they don't want to use dilutive instruments, and so they're limited by their capabilities to grow. Maybe they want to conduct M&A operations, but they can't because they don't want to take debt. So there's a plethora of opportunities in doing something good for the community, especially focusing on small businesses, and that's what we need to do. So, but in the end, it's a form of jihad. So, I would like to think that this is what I'm striving for, and what I would like to do is to help the Muslim community to increase their capital, increase their wealth, increase their opportunities by making financing and investing more accessible, whether it's for businesses, whether it's for private investors. And so, I think for young people listening, or anyone in the financial industry, don't be afraid to try come up with your own ways, network with the community, and understand that there is a real need for it. And so we shouldn't wait for the big players to do something. It's us as individuals can actually affect a lot of change.
Yeah, absolutely. I honestly found I found the stock extremely inspiring, and also I think it will be, inshallah, very informative for our listeners. And I certainly want to have you back on. So inshallah.
I would love to. I would love to. Yeah, I'm
Perfect.
looking forward to see what people think. I hope it wasn't too technical and I didn't lose anyone. But yeah, no, thank you, Jazakallah
I think it
khair
was
again for
good.
the opportunity.
Yeah, my pleasure.
Inshallah, we'll speak again.
Inshallah. All right, everyone. Thank you for tuning in. Assalamu alaikum and peace be upon you all.